Good day all. Ira Epstein of Linn Associates with your agricultural wrap-up, and this is for Thursday, the 22nd of August, 2019, about 3:35 in the afternoon, Central Daylight Time. A lot of hoopla going on with the waivers that the Trump administration had given to, I think 31 of them, to small ethanol producers where they don't have to buy as much corn. And corn farmers have their hands full with all the bad news that has been done via the trade wars, lack of demand, finding new markets, and there's an uproar. Now, what comes of it, I don't know. You also have tomorrow the cattle on feed report, so you want to stay tuned for that. That's always an interesting report. But as I often say in the meat markets, the lifespan of those reports is under a minute, and the algo traders just step in and God knows where you're at after that. And of course, a big event of the day is going to be Fed Chair Powell's speech early in the morning tomorrow in Jackson Hole, Wyoming. So there's plenty to digest. But when you look at the market, very much a mixed bag today in the grain markets. As we step over to the weekly area chart of just closes, we're down 11 1/4 cents at this point. We had a hard break from 906 3/4 all the way down on a closing basis to 842 3/4. We rallied back up and challenged recently the 18-week moving average of closes, and now we're falling again from that number. So you're still very much in the bear phase. Now, the crop tours are going on. I'm seeing lots of discrepancies in numbers all over the place. I have no idea what those tours are going to show or not show. What I do know is what I drew. And this was a downtrend line that we had put in, and I've kept it there this whole week. And we started off like this. Well, now the market today finishes off trying to get to that number, I think you'd agree with it, and having a pretty miserable failure with it. Almost the opening of the day was near the high of the session, and you had one spurt. It was very, very short-lived. When we take a look at the action, you got up high enough to neutralize the downtrend. 880 3/4 was, prior to today, the pattern of lower highs, lower lows. If you take that out, you negate that pattern. So now I'm out of what we'll call a swing line trend. The resistance is the 18-day average of closes, and again, you can see most of the times we've been hitting it recently, we've been failing against that number. If we drop from here, the potential could be that you want to challenge that lower Bollinger Band. If you want to mucker around, how's that? You're going to be playing at this 875 level for a little bit. Is there anything here that can set up a new trend? The answer is no for tomorrow. If you explode to the upside, you still have a lower low and then a higher high. If you break right on down, you still have the higher high and then the lower low. So I don't see that. And momentum is not helping me at all. It's just sort of drifting sideways. So let's go to the meal market. Is it telling a story? Unfortunately, it's not. You have the lower low, then the higher high. And where did you stall out today? You finished 299.30, 301.10's the 18-day average. Couldn't stay over it, don't have a trend. And momentum, well, it's corrected, past tense, an oversold reading, as when you reopen tonight, basis where you're at, I'll be surprised if that blue line doesn't jump up. I'm taking a guess on that, but we'll see if I'm right. In soy oil, you went back to this combination of the 18-day average and the 100-day. The market today finished at 28.90. That is under the 18-day average of closes, so you have the swing line down. You've got the bias down because you closed under the 18-day average, and momentum is trying to point down. First support zone, 28.70, and then the question, if you took out this 28.65, do you put into play a bigger price break? In the corn market, still very much in a downtrend, but what rules the day here is that you have this embedded reading. When that reading is lost, I will then say I think price and the 18-day average are ready to make a run for each other. Too soon. Don't have enough information yet on what the crop tours are showing, how the wrap-up's going to be, what the national average is going to look like. I haven't seen that yet. But the market is still looking at a situation where even though you closed 3/4 of a cent higher, the trend is down. In the wheat market, the trend is down. Now, the market still has the embedded reading. Today was a rally off that. If this market's going to fail, it should fail right off the bat and try to make another breakdown here. If you get much more of a rally, you can lose that embedded reading and suddenly be putting into play 483.5. So, interesting night and tomorrow that I'll be looking for. In the sugar, in fact, in all the softs, I think I've said that this prolonged break acts like one that is getting a little worn out. That does not mean I'm picking a bottom. What it means is it's acting worn out. You're oversold, you're not following through to new lows on the break, the trend is down, it's nullified if you take out 1169, which will carry you right into that 18-day average of closes. And no, because you got a lower low, and even if you took that out, you don't start an uptrend, but you can get a heck of a short covering rally. In the coffee market, you lost the embedded reading. And when you lose it, often, is all that I can say. That leads to price and the 18-day average making a run at each other. Twice back here, you lost it, and instead of doing that, you actually broke further. That's rare, but that's why I use the word often instead of always. In the cocoa market, you now have lost the embedded reading. This is why I was saying I'm wondering if these breaks, it's time for a correction. And if it follows through, I'd look for the 18-day average as your first resistance. Way up here is further resistance, but I don't know what would move it there. But is this a signal to be out of shorts? As a chartist, I don't care. You do what you want. The way I explain charts, you've now lost your downtrend. You had the lower highs, lower lows. You were embedded. You lost it, and you made the higher high. So I think the shorts on this have now, those that follow this type of thinking are probably gone to the sideline. Look where cotton is failing, right at that line in the sand, that 18-day average we so often talk about here. Now, you still don't have a good setup for a trade yet. You probably have to get under yesterday's lows and turn this momentum instead of pointing up to down to get something more bearish going. But I'd say the first sign, take out that 58.68, you got a problem in this market. Again, I'm going to repeat what I said. You have a cattle on feed report tomorrow. I don't care what the chart looks like. When you go into those reports, you're going to get a new set of fundamentals. So you want to be cautious. And hogs, still bearish, oversold, but they just don't lift themselves. And I don't see anything positive between China and the U.S. In fact, if anything, I think it's getting worse. And I say that because we keep saying we're going to sell those jets to Taiwan. And today China said they will put in a tariff on every company as a retaliation that's involved in that sale. So if you think those are words where we're all getting along, I wish you the best. We write about that and a heck of a lot more in our research. And if you have trouble finding research about commodities and you're going to site after site, well, number one, we can drop this right in your email box. Number two, it's available on our trade platforms. We also do oral research throughout the day talking the markets, but the only way you can get that, it's too hard to send out the audio files. The only way you can get that is through one of our platforms, which we welcome you to try out. If you go to our free trial page, you'll see that at www.iraepstein.com. You'll see the free trial. Sign up for some of these. Give yourself a shot at it. You can call my staff. They can get you set up, or you can click up here. It'll take you right to it. In the meantime, I'm Ira Epstein. I'm getting out of here early today, getting here early in the morning. I want to be here as Mr. Powell's speech is given and understand what he's saying and how the markets are reacting. You have a good evening.